Good afternoon, friends. This is Ruchira Vaidya, and you are watching my CA Final Audit channel. That is for CA Final students to help them in their audit subject. Now, let's begin with Essay 320, that is Materiality in Planning and Performing the Audit. Now, just we will understand what is audit materiality. What do we mean by concept of the audit materiality? Any item in the financial statements could be material if it influences the mind of the reader of those financial statements. Now, we all know that if any item in the financial statements is of such matter that it is impacting the decision of the users of the financial statements, like the profit, seeing the profit before tax, or the net profit, or the capital structure of the company, whether it is influencing the decision of the users of the financial statements whether to invest in a particular company or not, that in then we will call it as an materiality, that is audit materiality. Now, some items which individually may not be material but collectively they might be material. The auditor's determination of materiality is a matter of professional judgment and is affected by the auditor's perception of the financial information needs of the users of the financial statements. The auditor considers materiality from the following perspective. That is, one is overall financial information, and the next is individual account balances. Also, note that materiality could be quantitative or qualitative. Sometimes statutory provisions also contain the element of materiality criteria. The concept of materiality is not judged from just one point of view, but it is a result of interacting forces and factors. Now, just we will come to the next point, that is the performance materiality. Now, what is performance materiality? Performance materiality means the amount set by the auditor at less than materiality for the financial statements as a whole to reduce to an appropriately low level the probability that the aggregate of uncorrected and undetected misstatements exceeds materiality for the financial statements as a whole. Now, planning the audit solely to detect individually material misstatements overlooks the fact that the aggregate of individually immaterial misstatements may cause the financial statements to be materially misstated and leaves no margin for possible undetected misstatements. Now, if applicable, performance materiality also refers to the amount or amounts set by the auditor at less than the materiality level or levels for particular class of transactions, account balances, or disclosures. Now, friends, we have understood what is performance materiality. It means that in a particular set of transactions, such as, for example, depending on the size of the organization or the size of the entity, its revenue, its turnover, the auditor may keep a certain amount in the mind that below this level, that below that specific amount, he may not. Go into depth, like if the revenue is like, for just we take an hypothetical example for that purpose, if the revenue of the organization is 10 lakhs in a per annum in a year, then the auditor may decide that he may set the materiality level, that he may not cross check the transactions or not verify the transactions above the amount of 50,000, or this is just an example which I am saying. He may also set a different amount, so that is what we call as performance materiality. So depending on the revenue of the organization or size of the organization, the this performance materiality may vary, it may differ. Now, the next our portion is relationship between materiality and audit risk. Now, audit. Now, first let's understand what is audit risk. Audit risk is the risk that the auditor expresses an inappropriate audit opinion when the financial statements are materially misstated. Audit risk is a function of the risk of material misstatement and detection risk. Materiality and audit risk are considered throughout the audit, in particular, when identifying and assessing the risk of material misstatements, determining the nature, timing, and extent of further audit procedures, evaluating the effect of uncorrected misstatements, if any, on the financial statements, and informing opinion in the auditor's report. Now, the next portion which we will be going to discuss is use of benchmarks in determining materiality for the financial statements as a whole. Now, let's understand what is a benchmark in the audit. A benchmark can be a percentage is often applied to a chosen benchmark as a starting point in determining materiality for the financial statements as a whole. Now, examples of benchmark that may be appropriate depending on the circumstances of the entity, including categories of reported income, maybe the profit before tax, total revenue, gross profit and total expenses, total equity or net asset value. Now, there are certain factors that may affect identification of appropriate benchmark. Okay, now let's see what are the factors that may affect identification of appropriate benchmark. The elements of the financial statements, for example, assets, liabilities, revenue, expenses, equity, whether there are items on which the attention of users of the financial statements tends to be focused. Evaluating financial performance. For evaluating the financial performance, users may tend to focus on profit, revenue, or net assets. The nature of the entity, where entity is at its life cycle, industry and economic environment in which the entity operates, the entity's ownership structure and the way it is financed, means how much debt and how much equity it is, the ownership structure of the entity, the relative volatility of the benchmark. Now friends, this was all about materiality in planning and performing an audit. Now I have taken one question which is from the practice manual itself, just to highlight it. So I would like to read the question and then provide you a solution for it. Let's begin the question. As an auditor of RST Limited, Mr. P applied the concept of materiality for the financial statements as a whole. On basis of obtaining additional information of significant contractual arrangements that draw attention to a particular aspect of a company's business, he wants to re-evaluate materiality concept. Please guide him. Now, in this instant case, Mr. P, as an auditor of RST Limited, has applied the concept of materiality for the financial statements as a whole. But he wants to re-evaluate the materiality concept on the basis of additional information of significant contractual arrangements which draws attention to a particular aspect of the company's business. Now, as per SA 320, materiality in planning and performing an audit while establishing the overall audit strategy, the auditor shall determine materiality for the financial statements as a whole. He should set the benchmark on the basis of which he performs his audit procedure. If in the specific circumstances of the entity there is one or more particular classes of transactions, account balances, or disclosures for which misstatements of lesser amounts than the materiality for the financial statements as a whole could reasonably be expected to influence the economic decision of users taken on the basis of the financial statements, the auditor shall also determine the materiality level or levels to be applied to those particular classes of transactions, account balances, or disclosures. The auditor shall revise materiality for the financial statements in the event of becoming aware of information during the audit that would have caused the auditor to have determined a different amount or amounts initially. If the auditor concludes a lower materiality for the same, then you should consider the fact that whether it is necessary to revise performance materiality and whether the nature, timing, and extent of further audit procedures remain appropriate. Thus, Mr. P can revalue the materiality concepts after considering the necessity of such revision. Now, friends, this was all about the materiality, that is SC 320, in materiality in planning and performing the audit of financial statements. I hope you like this video. So, if you have liked this video, please give a thumbs up to this. And if you haven't subscribed my channel, or if you want to subscribe my channel to gain more insights of audit, please do subscribe it. Thank you. Have a great day ahead.